Jenny Brown, and a warm welcome to our weekly buy-to-let mortgage market update. I hope you're keeping really well. It looks like the sun is finally about to put in an appearance, and if I read the weather report correctly, I think we might even be having a dry bank holiday weekend. Almost unheard of. Now look, in terms of what we've got to cover off this week, lots of great stuff in terms of news from the lenders. We're also going to be having a look at what's been going on in the housing market and giving you some statistics there that sit around what's been going on. And then lastly, I'm just going to be updating you some news with regards to the high street and presenting you with some thoughts which may help you if you're looking to make an investment decision in the coming weeks and months. Keystone Property Finance have released some new rates in the last week, including some really competitive pricing across their green range. Now, the reason that the green mortgage market, as it were, is really starting to kick off is that the UK's built environment, including the construction industry, is responsible for around 39% of the UK's carbon emissions. This compares to 23%, which comes from transport. So with that in mind, the UK lenders are really starting to look at what they can do to try and drive a sort of greener future for the UK housing market. And one of the things we're seeing at the moment is a real kind of pioneering of green mortgages. And these mortgages are essentially there to reward people with better interest rates and fees for those people who are living in or providing more energy efficient greener homes. So with this in mind, Keystone have made some rate reductions across their full product range, so for what they would class as green properties, but also for the green ones as well. So look, the green rates, these are for properties which are 5 years or older and have an EPC rating of A to C. And the reason that Keystone are particularly targeting those properties which are 5 years or older is because these properties wouldn't necessarily have a higher EPC rating. But what they want to do is really reward those people who have stepped up, made improvements to the property and really made them as energy efficient as possible, which is absolutely to be applauded. It's a great work there, Keystone. Now, their rates on their green range for specialist properties, and this is HMOs and multi-units, start now from 3.24%, and on standard properties from 2.99%. Their non-green rates on specialist properties start from 3.34%, and for non-specialist properties 3.09%. Now, these rates are available to individuals and limited companies. There's no maximum number of properties in the background for borrowers. There's no minimum income. Their maximum age or maturity of the loan is 86 years of age, less 1 day. So essentially it has to be an 85. They will accept 10 units on a multi-unit. They can accept day one remortgages. Now, if you are looking to borrow through their specialist range with HMOs and multi-units, they do want you to have an element of letting experience already. But in terms of the lenders who do have a requirement for experience, I would say that Keystone are definitely one of the more relaxed lenders. So a great offering from Keystone. They have made significant reductions to their rates. I should also add here that on their non-green products, for loans over £200,000, they're offering a cashback incentive of up to £1,000 as well, which is always quite nice. So really great to see Keystone pioneering, particularly the green space at the moment. Landbay have made some reductions to their core product range, and have reduced rates by 0.1%, but also, as importantly, have reduced their product fees by up to 25 basis points. So Landbay now have rates starting from 2.95%. Now, Landbay can lend to limited companies. They do have a separate product range for trading companies, but they do lend to those as well. And obviously individuals. They do require borrowers to have an income of £25,000 per year, unless you're an experienced landlord, so you've been letting property for at least 2 years, in which case the income sort of base threshold drops to £15,000 per year. They do accept day one remortgages, which is really neat, and they do lend up to the age of 85 on maturity of the loan, and this increases to 95 years of age if you're borrowing through a limited company. BM Solutions have made reductions across their buy-to-let range in the last week of up to 11 basis points. So they've now got rates from 1.38%, and some of their rates do include potentially cashback and free valuations as well. So incredibly priced. What I would say with BM Solutions at the moment is that they are absolutely on fire in terms of service. We are sending cases into them, particularly for non-portfolio landlords, so those landlords with less than 4 buy-to-lets. And the offers are literally coming out in a matter of a few days, so they're absolutely brilliant right now, which is fantastic. In terms of BM Solutions, what they've said is they've made reductions on their sort of standard product range and also their let to buy range. And I thought it'd be worth just covering off let to buy in a little bit more detail because it's not a term that we often bring up. So a let to buy is essentially the process where you are renting out and putting a buy-to-let mortgage onto the property which is currently your main home, and you will then be vacating that property and moving someplace else. So that you're letting the property out to buy another one. Most lenders do actually offer these. There are a handful of lenders who do not, but most lenders do offer these. Some of them will have a separate product set for let to buy, and some of them just wrap it into their sort of core product range. Is it complicated to do? Not really, if I'm honest with you. The one thing that lenders do tend to want to see when they're doing a let to buy is that you are, or they need to get very comfortable that you're going to be absolutely vacating the property which they're being asked to lend on. And the reason for this is that a long time ago, loads of borrowers, when the dreaded self-cert mortgages kind of disappeared, lots of people were saying, I'm going to be renting out my property, can you lend me a mortgage based on the rental income rather than my own income? So they could borrow more than they could essentially as a residential. A lender went back, did a bunch of checks, and it turned out that most of these people had never actually vacated the property, so they just abused the use of a buy-to-let mortgage to be able to borrow more than they could essentially afford on paper at least. So that is why lenders are going to be very, very keen to be able to get comfortable that you will be leaving the property when you do a let to buy. And generally the way that they kind of get their heads around this is by seeing that actually there's a linked onward purchase that can be verified by a solicitor and so on. Now there are lenders who can take a view with regards to you kind of doing this arrangement if you're not actually buying a new property that you're going to be moving in with your partner or whatever it is. But there's various criteria that then sit around that, so the lender can be absolutely confident that that's what's happening. If you are in that situation and you do need a mortgage of that nature, just give us a call and we can chat you through the options. So look, BM Solutions have brought their rates down, also on their let to buy. The rates start from 1.38%. Some rules about lending with Lloyds, Birmingham Midshires. They are not lending to limited companies, they're only lending to individuals. You can have no more than 5 mortgage properties with the Lloyds banking groups. That includes Halifax, Lloyds, Bank of Scotland, within that group. So, it does quite limit, the number of people, I suppose, that can go to BM Solutions, particularly for those people that have got quite long-standing portfolios and will have borrowed with BM Solutions in the past. It can be quite limiting, but if you can get in with them, like I say, their service is just incredible at the moment and the rates are really good. Some other things to note: the maximum age on maturity of a mortgage with BM Solutions is age 80. There is no minimum income requirement. Also, their property value minimum is really low at £50,000, which wins them some applications for sure. And another thing which I think is really worth mentioning is that they have a really, really good product transfer offering. So what we often find is that when we take a client to BM Solutions as a new borrower, we don't often have to move them away to secure a new deal once they've, their rate is up. BM Solutions are really, really switched on to trying to hang on to their borrowers. So what they will offer to you to stay with them is generally very competitive. This is great for the borrower. Obviously, it's a cost-saving thing, and also you don't have to go through the whole process of remortgaging, every 2 or 5 years, which people really like. So a really, really strong offering from BM Solutions. Yorkshire Building Society has launched a new HMO product, which is quite good actually. It's available up to 75% loan to value. Minimum loan amount is £500,000. Maximum loan is £1.5 million. It's a 5-year fixed rate at 3.9%. It's not necessarily the most competitive 5-year fixed rate for an HMO, but there's a couple of quirks in terms of the Yorkshire Building Society's lending criteria, which actually makes this deal quite attractive. Now, a bit of context here. YBS are traditionally more of a commercial lender, so they do commercial lending, but they also do some residential investment mortgages as well. And because they come from a more commercial background, they're able to consider things like trading companies, companies with slightly more complex structures, as an example. Now they are able to accept properties with up to 12 rooms on this product, so larger HMOs, which is great. They are only looking to lend where the property is located in sort of larger city locations. So think places like Bristol, Manchester, Liverpool, Leeds, London, those kinds of cities. And they are really looking for the tenants to be either professionals or students. Now, with regards to the lenders' appetite to lend, like I say, they are able to consider slightly more complex cases. So if you are someone who has a limited company which doesn't fit around the kind of more traditional structure, or indeed you are looking for a property where you've got a slightly large number of bedrooms, and this could be a really, really competitive option for you. I read an article in the last week which I just wanted to share some of the content with you, because I thought it really kind of encapsulated what we've been seeing in the housing market over the last few months. So first of all, it said that Halifax have reported increases of 8.2% and nationwide an increase of 7.1%, and Halifax are predicting great growth in property prices later this year. Barrows and Foster have also gone further than this and predicted an average property price increase of £23,000 over the coming year. Now, Knight Frank have pointed to demand for country homes, saying this has pushed their prices up by 6.7% in the first quarter. And Ricks have highlighted supply issues with estate agents, showing lower inventories, whilst Google Trends show that visits to main property websites are over 30% higher, comparable to 2017 to 2019 figures. So what this is all really just indicating is, I think, what we've all been experiencing firsthand. The property market has been incredibly busy. But likewise, actually, when you're listening to and reading what people are talking about in terms of the coming months, panning out into the rest of this year, people are really not expecting things to kind of, quieten down too much. I mean, obviously they're going to quieten down a little bit. The stamp duty holidays really help things, but what people aren't really expecting is the property market just to fall over. I know when we're speaking to clients at Mortgages for Business, a lot of investors are saying, at the moment the market really is a little bit too frothy. I'm really struggling to find anything to buy, and when something comes on the market, it's a bun fight trying to secure this thing. So actually at the moment I'm just going to step back and just kind of, let this whole stamp duty thing play out, and then I'll come back to market later on this year. And there is absolutely nothing wrong with that decision. But I do think if you are thinking, actually, I'm going to step back and wait because I think house prices are going to tank, unfortunately, you could be in for a real disappointment. If you are in the market for investing in a property at some point in the rest of this year and into next year, I know when we speak to our clients, often they're kind of trying to second guess where they're going to see an uprise in capital value of properties, or also a stronger demand, an increase demand for rent. So with this in mind, I read an article which I found really interesting, which is talking about the fact that more high streets are going to be receiving new money to improve transport links, build new homes and transform underused spaces, in a key milestone for the government's levelling up agenda. So in total, 72 English high streets from Penzance to South Shields are going to be sharing over £830 million, with 57 areas announced so far as receiving some of this money. And this funding is part of the government's plans to protect, support and create thousands of jobs in a range of industries, delivering opportunities and prosperity to communities across England. So just to give you a flavour for this, some of the confirmed plans include £17.28 million for Grimsby, which will create a new multiplex cinema and market food hall, and that hopes to boost visitor numbers to the town centre. There's also going to be a new public square, an event space which we created, bringing more vitality and a buzz to the high street. £13.96 million is going to be going to Taunton to build new homes, business spaces and hospitality venues, and £6.28 million for Sutton in Ashfield for the refurbishment of the Sutton Academy Theatre space and repurposing of vacant retail spaces into offices and hospitality venues. Now, the Future High Streets Fund was launched in December 2018 and is a key part of the government's plan to renew and reshape town centres, making them a more attractive place to live, work and visit. So if you are thinking about investing and are not entirely sure where you may want to consider doing so, actually it may be just worth having a look at this list of towns which are going to be receiving investment going forwards. This could be a really good opportunity to nick in early before these places really start to have a facelift and the property prices invariably start to increase. And there you go, that is it. Another week of news from the buy-to-let mortgage market. I hope that was helpful. I hope you found it informative. As always, if you do have any questions about the things we've talked about today or anything else mortgage related, we would absolutely love to hear from you. 0345 345 6788, or have a look at our website. So look, I will catch you again next week. Thank you as always for taking time to come and have a listen. Have a great long bank holiday weekend. Let the sun shine down on us, and I will catch you next week.